Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the Forex market. So without further ado, let's jump straight to the charts and see which is today's Forex pair. In today's video, I want to speak about silver. Now, why I want to speak about silver? Because at the moment, we actually do have quite interesting price action and structure for a potential opportunity. So as usual, I will be performing a complete multi-time frame top-down analysis, starting from the higher time frames and then going down on the lower ones. And obviously, we will also go and check what we have from in order flow perspective. So commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing. And by the end of the video, by using a combination of our technical and order flow analysis, we will try to understand where we have the highest probabilities for a potential trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly time frame, we have a market which has tested multiple times a very strong monthly resistance zone. In fact, from here, the market started all this move to the downside. Again, from here, the market tested and rejected the zone to the downside. And we can see how the market lately has just tested once again this extremely strong resistance zone from which there is definitely the possibility to see the market provide a rejection to the downside. And in fact, that is exactly what the market has just started. So here in the monthly time frame, currently we're trying to create this triple top. However, at the same time, we can also notice a quite interesting thing. We can see how the market here has actually been creating higher lows. In fact, the first low that the market had created was here. Then we had the move to the upside, move back down, and the market created another higher low. And now there is the possibility for the market to provide another higher low, at the same time creating equal highs. Now, when you have equal highs and higher lows, which pattern is that? That is basically an ascending trend line, after which you do expect the market to create a break to the upside, because basically buyers are not managing to break above this high, but they are managing to create higher lows. And until no lower lows will be created here on the monthly, everything will seem quite bullish. Going down on the weekly time frame, what do we have? Now here on the weekly time frame, we can see that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, meaning that this red candle is actually a quite strong demand and support zone from which there is definitely the possibility to see the market provide a rejection to the upside. So also here in the weekly, everything seems quite bullish and we do expect the market to provide a potential rejection to the upside. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we have? Now here in the daily time frame, we can see that from this zone, the market had provided in the past multiple rejections to the upside. In fact, we can see how exactly from this area the market had started this move to the upside. Again here the market tested and rejected this zone to the upside. Again here tested and rejected, and once again here tested and rejected. And we can see how at the moment the market has been melting in a quite aggressive way all the way inside of this exact same demand and support zone that we have already identified from a weekly perspective and now confirmed here on the daily. We can also see that in creating this move to the downside, the market has also printed this overextended M formation. Now, in general, after the creation of an overextended M formation, you want to see the market provide a move to the upside to retrace basically at least to the 0.382 of the Fibonacci taken on the daily impulse. So in this case, from this high to this low. So here in the daily time frame, we do expect the market to provide a correction at least to this 0.32, because that is basically what the market does most of the times after an overextended M formation. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, we can see that lately net positions have been increasing. In fact, we went from having 28.9k net positions all the way up to having 49.8k net positions, with longs rising from 66k to 83k and overall shorts getting slightly decreased from 39k to 33k. So silver from an institutional perspective is getting stronger because hedge funds are adding longs and closing shorts, therefore increasing the net positioning, meaning that a potential rejection to the upside from this area is actually quite likely. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding silver to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to provide a correction at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.